Hey soldiers, do you have money in a bank? How confident are you in that bank? I want you to stick around because by the time we finish this report, your level of confidence may not be as high as it might be at this point. We're going to look at that, and we're also going to look at some mitigation strategies to keep your money. Now, I want to emphasize the word money. Keep your money gaining value and under your control. That's extremely important as we move forward in the 21st century.
Think about the future.
All right, there are some entities trying to take your money out of your control. We're going to get into that, but first let's head right into it and talk about what the major U.S. banks are doing in concert with the Federal Reserve. Major U.S. banks will participate in climate scenario exercise. The exercise will kick off the Fed's efforts to gauge the level of management of risk for banks when it comes to climate change. Okay, so they're going to use climate change as an all-encompassing umbrella to put you in a situation where you own nothing, and you definitely won't be happy. But we're going to work all the way around that and maintain value and maintain assets no matter what these guys do. We got to be nimble. The Federal Reserve announced Thursday that 6 of the nation's largest banks would participate in a pilot climate scenario analysis exercise in 2023. Say that 5 times fast. Bank of America, Citigroup, Goldman Sachs, JP Morgan Chase, Morgan Stanley, and Wells Fargo will undergo the exercise, which the Fed said will not have capital or supervisory consequences. The Fed plans to publish aggregate findings from the exercise, but no firm specific information. Okay, so they're going to put all of the data together and they're going to report it as a collective. Okay, the exercise, which had been expected, will kick off the Fed's efforts to gauge the level and management of risk for banks when it comes to climate change, after European regulators already mounted similar efforts. So we see a concerted effort with Europe and now the US and Canada as well, I'm quite sure, to stress test for climate change. Okay, so we're already seeing the rudiments of this thing where they're going to try to maintain control of how you spend your money based on climate change. Okay, and let me stop right there. I had a young lady in the comments mention, she said, why don't you take climate change seriously? And I shared with her some of the science. Okay, science, I hate when people say believe in the science. Science is not a deity. And some of the rock hard science that is never discussed is the fact that Mars is warming. That's per NASA, okay? Not Tyrone Keys, NASA. Now, what do Mars and the Earth have in common? Not SUVs, the sun. There is also warming on Jupiter. That is also a fact published by none other than NASA, okay? So all of these planets, Earth, Jupiter, Mars, have solar activity in common. Might that be it? Then she went on to mention something about CO2, and I reminded her that during the Cambrian period, 500 million years ago, there was a considerable amount of CO2 in the atmosphere, much more than we have right now. I'm going to put up a graph, okay? So, yeah, let's truly follow the science. Let's not make it dogmatic. But you see that the Bank of International Settlements, the European Union, and now America are tying your money to this issue. The potential effects of climate change, namely through rising sea levels, worsening floods and fires, and government policies transitioning away from carbon-heavy industry, could destroy trillions of dollars of assets around the globe. Now, I guess what they're trying to say is, one of the things they're trying to say is, if the sea levels rise, then coastal properties will be at risk. Well, someone needs to tell Barack Obama and Al Gore that, because they have palatial seaside mansions. And I don't think they would have bought those if they really believed that sea levels were going to rise and wipe out their homes, A, where their families stay most of the time, and B, their investment. Furthermore, I don't think a bank would lend on that if they truly believed that there was going to be the property was going to be underwater before the mortgage was paid off. Okay, so let's follow the science and let's follow some logic as well. In its announcement, the Fed emphasized the pilot exercise will be strictly for information gathering purposes, calling it exploratory in nature. Oh, I'm sure they will gather a great degree of information. The Fed will provide climate scenario narratives, which banks will use to analyze the impact of their portfolios and business strategies. The Fed will then review those findings with the firms to help them build up their ability to manage climate-related risks. So what they're gearing up to say is loans are going to be based in this climate ideology, some way, somehow. Risk is now going to be assessed and connected with climate change. All right, now let's hear from the World Economic Forum. They are in coordination with the European Union, with America. We're seeing them all link the climate philosophy to your money. What if, get that, what if extreme weather froze your bank account? What? No, it doesn't. Here's what they're saying with that. We're going to use the climate philosophy, this whole climate change issue, to control your bank account. Now, we already heard, I never tire of saying this, we already heard Saul Amrova say, she was the former nominee to be President Biden's controller of the control of the currency. She said that one way that inflation could be controlled is not by raising interest rates, is not by a contraction of the money supply, but by actually freezing Americans' bank accounts. All right, so you've got a major official. Now, she didn't get that nomination, but let's just be honest. They were telegraphing what they want to do. They knew she had made these types of statements in the past, and yet they put her up for nomination anyway. A severe snowstorm could cut off people's access to money. Now, why would that be? We've had severe snowstorms in the past, right? And you've been able to get your money. And it would seem like today you would have less of a need for this type of intervention from the World Economic Forum because so much money is electronic. When I was a kid, we had the 4-foot snowstorm and we survived. We had cash. Okay. So understand what's going on here. Now let's move quickly over to the Bank of England. The Bank of England is actually taking banknotes out of circulation, and that's fine. That's been done before. But what we're seeing with the Bank of England is they're taking 20 pound and 50 pound banknotes out of circulation, and they are telling you to return them. They're telling you that they will no longer be considered legal tender. So this is the last week, and this was the last week of September that they made this edict. This is the last week that our paper banknotes can still be used. The Bank of England will be withdrawing legal tender status of 20 pound and 50 pound banknotes after September 30th, 2022. After this date, businesses will no longer be accepting these banknotes as payment. So just like that, You might have had some of those 20-pound notes or 50-pound notes under the mattress or in a safe somewhere. Well, guess what? Now you're going to have to switch to their polymer note. And if you don't want to do that and you want to hold on to those banknotes, well, too bad, because they're not going to be redeemable. This is a major economy saying your money is no longer good here. All right. And now some will argue, yeah, but they're telling you to exchange it. Yeah, they are. But this has never been done in the United States. I'm not sure if the British people are used to this happening, if it's happened before. We do have British viewers. We would appreciate it if you could enlighten us. But it seems very extreme for them to say, you know what, we want this money back. And look, this accounts to, they're saying that there are still over $5 billion worth of paper 20-pound notes out there. And there is over $6 billion in paper 50-pound notes out there. So there's a lot of money out there. So you're going to have $11 billion worth of, 11 billion pounds rather, worth of banknotes that are worthless just with the stroke of a pen. Now, if they can do that just in one fell swoop, then what's to stop any other major economy? Because don't get me wrong, the British economy is the 6th largest economy in the world. However, that's significant, okay? And they are a major financial center. So what are we seeing? Let's pause for the cause. What are we seeing here? We're seeing the governments of the world in coordination with the World Economic Forum say we're going to take more control over the money and we're going to put it under the guise of climate change. So they're coming at you with this whole fear mindset, like they did with certain other issues back in 2020. Fear is such a powerful control mechanism because you say the right things and fear might just make you take all your money and hand it over to the government in exchange for electronic money, which they control. All right, now let's talk about a bail-in. Not a bailout, a bail-in. In the United States of America, now these provisions also exist throughout the European Union. Okay, for all of our viewers in Europe, the bail-in is a mechanism by which taxpayer money will not have to be used to bail a bank out. And you might say, great, that sounds excellent. But the bail-in, what it does is it focuses on the debts that the bank owes and pretty much erasing those debts. Now, in any given bank, what is one of the biggest debts that they have? Well, the deposits that you make to the bank in the form of savings and checking products. Those are liabilities for the bank because once you give it to the bank, they owe it to you on demand. The masses of society still remain uninformed regarding the particulars of the Dodd-Frank Act, even years after its enactment. But financial experts and economists who understand the details of this law are beginning to voice their doubts as to whether all this excessive regulation is warranted or if it can actually be enforced without creating an even more detrimental hazard to the entire economy at the time of a new crisis. Right here in America, the bail-in provision of law comes out of the 2010 Dodd-Frank Act. So it's been out there for quite some time, but it hasn't really come to anyone's attention because this is the first time we're going back into a financial crisis. A bail-in provides relief to a financial institution on the brink of failure by requiring the cancellation of debts owed to creditors and depositors, because you are a creditor as a depositor. A bail-in is the opposite of a bailout, which involves the rescue of a financial institution by external parties, typically governments, using taxpayer money for funding. Now, Dodd-Frank goes into great detail about how this will be great, the bail-in provision will be great, because it will help the taxpayers save, money. Well, will it though? Because we can presume that most of the people with deposits at the bank are taxpayers. So you're going to get it going and coming. If they bail them out, you're going to be hit from the standpoint of being a taxpayer. If they bail them in, you're going to get hit from the standpoint of being a depositor. At this point, the only example we have of how statutory bail-ins would actually work are the results of the insolvencies of the two largest commercial banks in Cyprus, which occurred in March of 2013. In the end, only one bank was actually shuttered and minimal taxpayer money was required. Consequently, government and banking officials were quite satisfied with the results of the bail-in process, except that the stockholders, bank depositors, and the Cyprus economy did not fare too well. So that bail-in provision puts it on your shoulders as a depositor, okay? Now, you might say, well, I'm pretty confident that my bank is doing rather well. They just passed the stress test. I'm good. Cool. Consider Credit Suisse. Do you really know what your bank is doing in terms of the deals that they're making? Like in the run-up to the 2008 mortgage crisis, did you know anything about credit default swaps and how many of them your bank may have invested in? What if you were somehow tied into Lehman Brothers through owning their stock? Did you know about these things? Yeah, right. Years of scandals and executive turnover have driven shares of the once formidable Credit Suisse to an all-time low. The question is, can they go even lower? The answer depends on how much capital the bank will need to raise to execute its turnaround plan. For 3 decades, the Swiss bank tried to combine a swaggering Wall Street investment bank with a leading private banking franchise that manages money for the world's richest people. The strategy was formidable. It was profitable, rather, and formidable, I'm sure, for a while. Then broke after a series of financial disasters, including a $5.1 billion hit last year from client Archegos Capital Management. Earlier restructurings weren't enough, and Credit Suisse is preparing to pull back significantly on Wall Street to turn itself into a leaner, less risky institution. Now, part of the way they're going to do that is they're going to issue more shares, which is going to dilute the value of the company for the current shareholders. They're not mentioning anything about putting this on the folks that deposit into the bank yet, but it's a German-owned company, so it's under the purview of the EU in terms of the financial oversight. So who knows what the ultimate decision will be? I can tell you right now, Europe probably is not feeling like they're in the mood to bail out a bank, considering they're about to go into an energy crisis. Fixing a broken bank is expensive. Money has to be spent unwinding long-term trades and paying exit packages for bankers. They're saying that Credit Suisse is looking at between $4 and $6 billion it needs to come up with in order to get out of this mess. Is that the kind of thing you want to hear if you are a depositor at a bank? All right, so I have long encouraged people to just reconsider their relationship with a bank. And now we have some empirical proof as to why that should be happening, in addition to the anemic return you get on your money in comparison to if you go to that same bank and take out a mortgage, vehicle, or credit card loan. All right, so what can you do? Well, I think that it's probably prudent at this point to start taking a look at hard assets. Money is different from currency. Money has some intrinsic value to it. Does the dollar have intrinsic value? Absolutely not. It hasn't been linked to anything with intrinsic value since 1971 when Nixon took us off the gold standard.
Well, I'm not a crook.
Now, you can make the argument that the dollar is backed by something, and it is. It's backed by the United States enforcement ability with regard to taxation. And as long as people keep paying that and the enforcement arm remains strong, which it seems like it's going to do with 87,000 new IRS personnel coming on board at some point here, then, they can continue to continue to spend, because the United States isn't real big into servicing its debt as it is into spending us into oblivion. So hard assets like land continue to be attractive because you can make land into an income producing asset in many, many different ways. Renting an apartment out to an individual or family, renting a facility out to a business, server farm, corporate kitchen. We've been over that. You can also, depending on what land you have, if it's arable, it's good soil, you can farm on it. There are many ways you can use land to produce. You may be able to get with one of these electrical companies, depending on how much raw land you have, and put up a solar farm. The list is endless. Now, of course, you will at some point convert that money into currency. So you got the money, the land. It's being converted into currency when someone pays you a rent. So you have to interact with a banking institution, or a financial institution rather, at some point. But there are banks. Then there are credit unions who have a whole different. Most credit unions aren't controlled by the Fed. They're owned by members also, not share owners in the sense of a publicly traded company. And then there's the insurance company, which I cannot say enough about because the returns are better and you get tax benefits and you get a final benefit that you can pass on to your heirs tax free. Okay, so there are alternatives. Now there are also other hard assets that include your own business. That is something that you can use to create income and then use that income to buy land, stable assets like silver, gold. We've been over those 1,000 times. Mining stocks that bring that stuff up out of the ground because silver is in big demand due to all of the electronics. So take that for what it's worth. Rethink your position when it comes to a bank because they could bail you in. They could do that, okay? Banks are under a lot of pressures right now to conform to this reset that society is going through, and they've told you point blank.
And I see the need for action. I see the need for a great reset.
You will own nothing and you will be happy, but you won't be happy. Okay, so take a look at this video. It talks about Europe being on the brink of collapse and how they had to make a major move this past week in order to salvage their pension system. You got money in a pension or some sort of retirement account? You want it to be there when you're ready to retire, right? Also, keep in mind, we're doing live streams. We're live streaming the markets, the commodities markets, the stock markets, the crypto markets, even though I don't mess with that. Some of our viewers do. More power to you. I hope you get phenomenally wealthy. But check that video out, guys. I'll talk to you soon.